because you're still going to get your payment next month. If it's vacant, you're still getting your payment. If it's delinquent and you're going to court to evict somebody, the lender still gets their payment. Nothing changes on the lender side.
Way.
No different.
You're servicing the most valuable community in this country, probably in the world. The ultra affordable housing market. It doesn't even exist. You all need to hear this, folks.
On a house that we might have paid $20,000 or $30,000 for, they end up paying us back $315,000.
So Scott, tell me a little bit about this slow flip thing. I mean, when you think of flipping, I always think, because we've done over 270 flips, I think fast, like let's get this thing flipped as quick as we can. So you're the slow flip guy. Like, what's that all about? Seems counterproductive to slow flip something.
It is almost the exact opposite. And so, ironically, and I was just mentioning this, slow flipping is, in my opinion, the fastest path to wealth, even though it's slow. Now, with that, I always say it's not the fastest path to a check. Wholesaling, obviously, would be the fastest path to a check. Flipping houses, rehabbing and flipping them. But for wealth, and by wealth, I mean more money coming in passively than you have going out. And
hold on a second, real quick. I didn't mean to cut you off, but flipping and wholesaling are transactional. So, like when I think of those, like you flip a house, you're right back at it. Otherwise you're broke.
You're done.
Same thing with wholesaling. But then like you had just mentioned, like payments in rental or some type of income coming in. That's just not synonymous with
the word
flipping. So can you just repeat that part again? Because I want to make sure everybody picks up on that.
Do we have time? I'm going to tell you a short version of exactly how slow flips work. So we buy lower dollar properties, and there's two sides to it, the buy and the sell. On the buy side, we use private money. We pay 12% amortized for 60 months, 5 years. And then it's free and clear. Simultaneously, when we buy them, this is the flip part. We sell them. We don't renovate them. We don't fix them up. We generally never even see them. We sell them now with long-term owner financing on a 30-year mortgage. So we don't make a whole bunch of money for the first 5 years, but then after 5 years, we own them free and clear. Our buyer, when I say we own them, we sold them now on an agreement for deed. Our buyer is in the property. They're the ones who are fixing them up. They're the ones who are making it their home. Sometimes they're investors. More often than not, they're homeowners. And we just operate like the bank. We collect payments. We pay out our lenders for the first 5 years. And then after that, we're just collecting payments. That's the flip part, is we are selling them right away. I have 180 or 179 right now because one just closed. I have 179 right now. And it's not like a flipping business where you have all kinds of employees and contractors and coordinators. It's just me. All I really do is process payments. The first of the month comes in, payments come in. If somebody didn't pay, we got to send out a notice. If somebody really didn't pay and time went on, then you got to file like you would if it was a eviction. But my primary business is just processing payments.
But on the private money, because I'm very familiar with that on Private Money Club, on the private money side of things, if you're amortizing the loan over 5 years, aren't those payments really, really high?
Yes. So let me explain something that most people, and I'm glad you're sitting down, because when I say this, most people want to argue it. That doesn't exist. You can't do this. Our average buy price, you are sitting down, right, Chris?
I live in Buffalo, so yeah, I'm sitting. Should I stand?
Is $30,000. So people want to say right away when they hear that, they say, that doesn't exist. You can't buy a house for $30,000, and let alone livable, or it's going to be in a war zone. It's going to be falling down. And you are right in most areas in the country. Where do you live at, Chris?
Buffalo, New York. Well, a suburb of Buffalo, New York.
Well, actually, upstate New York, they do have properties that do sell in those price ranges. Now, we used
to buy a lot of them. I literally just sold a house. It closed yesterday. We've owned it since 2014, and I paid $27,000 for it when we bought it. And I just sold it.
We don't operate there just because the laws aren't conducive to investors. But there are price points that work for us there. I just don't buy them. But there's the whole Midwest where you can buy. I did a podcast earlier today, and the guy was talking about his first slow flip. He paid $20,000 for it. He collects $775 a month from the property. He sold it at $79,000, and they exist abundantly. Like usually when I'm online, I could go to Zillow and there's like 3,000 or 4,000 available at any given time with 30,000 or under. Now I live in Virginia Beach. You're not buying anything. Now, there was a time, 2008, 9, 10, when I started this, we were buying in my local market. Now, I mean, those same houses are 250, 280, but there's a whole, Illinois, Missouri, Indiana, Ohio, Mississippi, Alabama, Michigan. There's an abundance of these properties. And so $30,000 at 12% amortized for 5 years, the payment comes to 667.33.
Yeah, that's nothing.
So
They can't even rent a house for anywhere close to that.
Absolutely. But the reason we exist, the hole in the marketplace that we're filling, is banks will not finance these properties.
No, not at all. It's
no
not
matter
worth their
how
time.
good your credit is, how good your job is, banks are like, they're not doing a mortgage for 30 grand. Most banks, their minimum is 50, but a lot of them, it's even higher than that. So there's a hole in the marketplace. People want to buy these great deals, but unless they have cash, they can't buy them. They can buy them from us because we finance, but they can't buy them conventionally because the banks won't finance them.
So you're on your delinquency, like what percentage of your deals go delinquent?
So that is a great, great question, and it varies, and I'll explain to you why. So I right now have 3, and so you would say 3 out of 180, it's a tiny, tiny fraction. It's very little. But the way our business goes, we call them lifers, right? So we might sell a property, and sometimes you might sell it 3 times or 4 times before you get your lifer. Once you get your lifer, you never see that house again because that's somebody who's treating it as their home. They're fixing it up. They're living there forever. In the beginning, sometimes it's a higher delinquency rate. Like I have some people right now in my program that have up to 20%. That's a lot. Like they might have 10 properties and 2 of them right now are in some stage of eviction. So it's really high in the beginning. Sometimes not. Sometimes you get lucky and you get a lifer right off the bat. But more often than not, you're going to turn a property 2 or 3 times, sometimes 4 times before you get your lifer. I wish I knew how to get the lifer right off the bat, but we haven't figured that out. And so once you get your lifer, then there's no more work. And so the people who are more established, I've been training this program since 10 years now. So the people who are more established, like myself, have almost no delinquencies or evictions, almost no, because the people, they've already all turned and they're all on the lifer stage. But in the beginning, they're brand new. And so you end up having more turnover.
So let me play devil's advocate. Let's say I'm a lender. Let's say you come on, you put one of these deals on Private Money Club. I got 30 grand in my self-directed IRA. I lend on one of your deals. All of a sudden, 1 month into the deal, the 5-year AM, the person goes delinquent. Like, what would be your process? So I'm the lender. You're putting the deal together. I'm thinking I'm going to get $600 a month or so on my money.
The lender would never even know. The lender's not involved in that part. So the lender just gets his check every month on the 1st, whether it's vacant, whether it's delinquent, because the lender is not involved in that part of the transaction. Our private lenders are basically a bank. They're doing a note and deed of trust on the property, and they're getting 60 payments of 667.33, regardless if the property's occupied, if the person's paying, if it's delinquent, the lender is still getting paid to perfection. So the lender is not involved in that part of the transaction. Does that make sense to you?
Yeah. Now, how about the collateral side of it? What the lender? How are they protected?
They have a note and deed of trust. A mortgage depends on the state. Some it's a deed of trust. Some it's a mortgage against the property.
Mortgage I think is more acceptable, and people that are deed estate, they understand it's kind of basically the same. So I'm the lender. I got a mortgage on the property, first lien.
Yep.
Really?
First lien, correct.
So I lend 30 grand. I'm getting 600. The person you sell the house to goes delinquent month 1. They pay 1 month's rent because obviously you don't let them move in until they do that. But then the next month they go delinquent. They're just bums. I don't even know that there's a problem.
You wouldn't even, no different than Bank of America wouldn't know, because you're still going to get your payment next month. If it's vacant, you're still getting your payment. If it's delinquent and you're going to court to evict somebody, the lender still gets their payment. Nothing changes on the lender side. No different than if you were Bank of America. They just get their 60 payments. They're not tied to the performance of the property.
So I hate to say this, but like, Scott, why wouldn't you go out and find like family offices or institutional capital where they've got, even a fund like, we operate 8 different funds, like where we're looking for diversification. I mean, at 30,000 a pop, dude, we can take 500 grand of our fund, we can lend it out, and we can be totally diversified with first lien holdings, and we're still getting our checks.
So I can tell you exactly why. So I've had friends even tell me that high net worth and say, "Well, I'll do it. I'll do $2 million, but I don't want to do 30,000." And I'll be like, "Well, our deals are 30,000 per house." And one of my friends, I'll tell you his exact words. He says it's going to cost me more for my secretary to manage all this than we're going to do doing 30 at a time. Most people and family offices exactly the same thing. They don't want to do small loans. They want to give me big money.
You're right. You're right.
And I don't want to manage people's money. What I want to do is do one loan, one house, and standardize it. And most like family offices and high net worth people don't. Some of them do. I have people that have a few million out, but they took the time and did 30 and 30 and 30 and 30. But the people that just want to write a check for 2 million, I'm like, we can't do it because the houses, we got to do them, get them performing. They're low dollar houses, and so it takes a little bit of time.
You, as the company, you're taking all the risk of making sure that those payments are paid to the borrowers.
100%.
Wow. I never heard a model like this. Pretty interesting. I mean, I'm just sitting, I got a lot of stuff going through my head. Have there ever been any lenders that have lent to you on any of your properties that have not been paid or not been paid back all their money?
I hate saying this. I always have to knock on wood when I say it. We started this process in 2011, and I have a group. I have over 1,400 people in my group, and we also facilitate lending for them. And we, to date, have done thousands of them. And not only have we never had a default, we've never even had one be even 1 month late. And so I love being able to say that, but I always say I got to knock on wood because it could happen next month, right? There's obviously no guarantee, but it's.
What would have to happen for that event to happen where you did go delinquent for your lenders? Well, I mean, the lenders are still in first lien position. So like from a lender standpoint, there's still the collateral. I mean, at 30 grand, you're minimizing your risk pretty low because I mean, it's hard to believe that a $30,000 house is going to be worth less than 30,000. And even if it does, I mean, it's over time, you're going to be fine. So like run me through what would have to happen? Because I mean, real estate's in the tank right now. Real estate's in a shitty place right now.
Right.
But what would be that event besides, I don't know, a nuke?
That's the thing, and this is what I tell people when they're like, "Oh, but the market's going to do this, and this is going to be vacancies." I said, everybody can move down a level. You can be in $1 million house and go to a $500,000 house. You can be from a $500 and go to a $200,000 house. When you're in a $30,000 house, that's it. There is no going down a level. People can move down into your house.
Dude, you can't even go to a mobile home for that.
You can't go anywhere. And until people actually research, and that's why I get a lot of hate on the internet. People say, "Oh, there's no such thing as a $30,000 house," and I'm like, there might not be where you live, but if you spend 5 minutes on Zillow, you can just search the country, and there'll be 3,000 or 4,000 every day that are in the country, and they're livable. You look at them sometimes, and I'm like, it's got granite counter. How? I'm like, how does this exist for this price point? The land alone, you would think, has to be more, but they exist and they're abundant. There's a lot of them out there. And they're desired, even though like some of our areas have declining populations. People are like, well, I would never buy with a declining population. And I agree in a long-term rental or if you're buying for appreciation. But we have a high demand because we are servicing a community that cannot buy otherwise.
100%. Yeah, you're servicing the most valuable community in this country, probably in the world, the ultra affordable housing market. It doesn't even exist. Like it is so like just, it's been shit on forever. I mean, these people can't find a home, a place to live, even the dumpiest apartment for what you could sell them a house for. Like that's where I'm thinking like, how could you, I mean, and yeah, I suppose you get a state where you buy one of these houses and all of a sudden that state, it's just hard to evict them. So you go a year trying to evict somebody. I mean, that would be a state like New York, like upstate New York. This is why you avoid it. It's so freaking hard to get a tenant out of your property or get somebody that is an owner out for a foreclosure. It takes years. So I'm sure you're aware of that, which is why you avoid
Washington. Yeah, we don't invest in any of those states where they don't treat investors well.
Yeah, the blue states. You stay away from those ones. Yeah,
right.
Got it.
Although we are in Illinois, which is ironically, and it's very blue there. However, their laws, even though they're not as good as most of our states, they take 60 days. Most of the states we're in take 6 weeks. In Illinois, it takes 60 days before we can file, but we get such a nicer house and higher monthly payment that it offsets, and people are making great money out there.
Yeah, Illinois is great. Wow, this is really cool. Now, the other thing too, you had mentioned earlier, 1,400 people, and you ran over it, but I want to kind of pause and go back to that. You have a group. Explain this group. What do you mean by you have a group?
So I train people, and we have a group, a community. It's called the Freedom Accelerator program. And so we meet every single week, and people post their deals. And as you know, people wholesale in the group. We have fillers that fill the properties in the group. But we also track, like people will post, I just bought my 25th one, I bought my 30th one, and they'll go over the numbers, and we go over it every week. And it's amazing to me about the success level. I mean, people that have no real estate experience, never physically travel out to Missouri to see anything. But we have, we have boots on the ground out there. We have a lawyer out there. We have locksmiths. We got people to do pictures and video, and now have 10, 20, 30 properties. And it's just a cash flow game. That's it. We're just doing, much like the lenders do, only we're doing it with no money. We're buying the properties with private money. We're selling them with long-term owner financing. And so it's just, collecting payments, making our payment, and then the 61st payment is all ours.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
Wow. And in this group, these are all people that you're training how to do exactly what you've been describing the whole first half of this conversation?
Yes.
And then you, as the group or the founder, you're just running the processing. So basically, you're a loan processor at the end of the day.
No, I don't provide their loans. I teach them to raise private money, and I try and facilitate.
Okay. So you're creating little hubs. So they're all out doing what you're doing. So like when I was talking to you about that 30,000 and how you've never gone delinquent. So that's just you.
No, that's all. I also facilitate for a lot, of people, not everybody in the group, because I can't do it for people that I hardly know. So I do it for the people, like we have a mastermind, people that I know their business, because obviously I can't just take a random name off the internet. The people that I actually know that are in the mastermind, I facilitate for them as well. Loans that I've facilitated are probably 15 or 1,600 of them already. And zero late, zero, not even delinquency, but zero even a month late.
Wow. That's
and amazing. I love that when I meet with new lenders. And that's why I'm always like, I hope I can continue to say that because
Scott, how long have you been doing this now?
So I've been real estate investing since 1994, but I got crushed during the bust. And
you didn't but you at 1994, you've been through what, 2 busts now?
Well,
maybe 3 if you really count it.
I only call 2007, 2008 the bust.
Yeah, that was the bust.
I got smoked during that one because I was doing the conventional model up until then, which wasn't even named Burr then, but refining and pulling the equity out and buying more stuff. And then I got crushed. Well, after I got crushed, this is where I came up with the program that we do now, the slow flips. Houses that got foreclosed on that were like $200,000 houses at the time, had a mortgage on it for $200,000, got resold by the bank as an REO for 30 grand, and abundantly. And nobody was buying back then. And people talk about it all the time. Like if you were to Google, how much did the market go down during the crash? They'll tell you, 22%, 18%. Well, and I'm like, no, that's bull. That might be a great statistic for owner occupied or retail listings on the MLS. But $200,000 was owed on the mortgage. It sold at 30 grand. Some of them I bought back. My own houses that I lost, I bought back for 30 grand. I still own them to this day. And so we were stuck in this thing where now I had a whole bunch of houses. I had 84 houses going into the bust. I lost about 55 to foreclosure, and it was devastating. And now, as the smoke's clearing, the best deals you've ever seen in your life are out there. But now my credit's shot. I blew all my money trying to save everything. And I'm like, well, how do I buy them? And that's where we started coming up with the private money. But everybody wanted to either do 6-month terms, which wouldn't work for me. Hard money lenders want 6-month terms, or they wanted to do a long term. We can do mortgages. I can get you in this program, grouping them for 30 years. And I'm like, well, I don't want that either. I want free and clear. And then that's when it hit me. I was like, well, I buy a car for 30 grand and it's 5 years. How come if I buy a house, they want to do it for 30? And that's when I started playing with the amortization schedule and came up with the pitch. And once I got my first lenders, I was off to the races. I was like, oh, this is way better. Yes, it struggles the first 5 years, but then you are free and clear forever. And so I'm all about free and clear. I know that's anti what everybody talks about, leverage, leverage, leverage. I'm not a leverage guy. I am all about being free and clear.
Let's do kind of like just a speed round here on amortized mortgages, because you probably know them better than most, because I think you've understood and learned the mathematics behind these 30-year amortized mortgages, and now they're proposing a 50-year. Like, do you want to shed some light on that? Because it is probably, number one, I think it's one of the biggest, I can't call it, it's not a scam. It's just, it's kind of slimy how the banks set up the mortgages.
So I'm going to tell you exactly how I talk about it when I'm on stage.
Give everybody listening, because you all need to hear this, folks. Because
I try and put this vision into people's heads. So I'm going to share with you the way I convey the vision. Doing the conventional model. You have seen the show The Simpsons, right?
Oh yes.
And so Mr. Burns from The Simpsons, I always use him as our guy, right? And I say, Mr. Burns is at the top. I say, you go to any city in the United States and the tall buildings are going to be bank buildings. And in the top of it is Mr. Burns sitting here doing his thing, right? And what is he doing? He's lending the conventional Burr people. He's lending all these people money. Now, we as conventional landlords or Burr people, what do we have to do? We take his money, we fix up the house, renovate it, refinance, whatever that they do, put a tenant in it. We have to deal with the stolen air conditioning unit. We have to deal with their late. We have to deal with going to court. We have to deal with the city's loan so that we can collect this check. And let's say it's $1,000. Then we get to break off which little piece we can keep, and we send the rest up to Mr. Burns. And he's just sitting up there going, run along, run along. Tenant didn't pay you. I don't care. Pay me. Oh, they stole your air conditioning unit. I don't care. Pay me, right? He's just sitting up there the whole day forever. And that's the model that everyone teaches still. They're like, oh, just borrow the money from him and keep, not realizing you basically enslaved yourself. Now you work for him. What we've done with the slow flip model is we flipped it on its head to where now we're Mr. Burns. We now are doing these 30-year loans for homeowners as well as for investors. Now they're doing all of that stuff. They're dealing with the air conditioning unit. They're dealing with the paint. They're dealing with the lawn. And all we're doing is sitting there and waiting. First of the month's coming again. And then all the checks start coming in. And a 30-year amortization. So I'm going to give you, even just on our math, not forgetting your house or higher dollar houses, even on our low dollar houses, $875 a month is our average that we collect on a house. On a 30-year amortization, they pay back $315,000. On a house that we might have paid $20,000 or $30,000 for, they end up paying us back $315,000. And that's if the very first buyer was a lifer. If it went to a second, third, fifth buyer, so much even more. And I'm going to tell you a story that just happened today. I have a house that I had a guy in there for 13 years, and he just moved out. It's a townhouse in Chesapeake. He was paying, when he moved in, his purchase price was $89,000. I bought it for, I think, $25,000. He was buying it for $89,000. He was paying $875 a month, and his purchase price was $89,000. He just left, and we refilled it today. New buyers, starting over the process and everything. Mind you, it's been 13 years.
Now the lender didn't even know about any of this shenanigans going on.
Well, the lender got paid off years ago. It was only a 5-year loan, so the lender got paid off years ago. So now we turned it over. Now the purchase price was $199,000. They're paying now $1,895 a month, and they gave $6,000 down today. So you take this property that I paid $25,000 for 13 years ago, and now I've been paid for 13 years, but forget all of that. Now today I'm getting $1,895 a month, basically $20,000 a year, a little bit more, on a house that I only paid $25,000 for originally. I mean, the math is staggering. Yeah. The returns on slow flips are unlike anything else. There are work involved though. And that's why I say lenders, private lenders, they just want to be lenders. They don't, like, a lot of times they hear the what we do and they're like, oh, that sounds better. I want to do that. And I'm like, yeah, it sounds that way, but that's a business running it, where private lenders get to just be lenders. They get to put out their money, and I do private lending also. They get to put out their money and just get a return, and that's it. And then as it reaccumulates, they lend it out again. When you're doing this, like I was saying today, there were showings. They had to go and deal with a person moving in, do new paperwork, and it's a business in itself. So it's two very different things, but the returns are just staggering. That's why people always say, "How could you pay 12%? It's ridiculous. You're paying 12%."
They don't understand amortization. That's it.
Right.
That's all. That's all it boils down. And I knew you were going to get to that. Like,
yeah.
How much is the average 30-year note you're putting out there? 30-year mortgage you're putting out there?
$89,000.
No. I mean, what is the interest rate?
Oh, on average, they 11.6, I think, is what it comes out to if it's 875.
That's amazing.
12 is usually our cap. Most states, that's the cap. The usual cap is 12%.
Yeah. Wow. Yeah. I mean, listen, like it's so crazy because every single day of our lives doing what we do with the be your own bank stuff, and not so much the private money club, but be your own bank, we are running the mathematics using our software called the Vault, doing exactly what you're doing in the reverse order that you're doing it in as well, because we're becoming the bank. And that's exactly what you did. All you did is you sat down, you looked at the shenanigans that was going on, like your Simpson example, and being like, this is highway robbery. I want to do this. Not for any selfish reasons. It's just, listen, why should the bank make all the money when you can be the bank and make the money yourself? And you just figured it out. And you're like, wait a second. And then I can use private money, but the long-term financing can support the short-term financing. Dude, it's brilliant.
The real money.
So simple.
As you know, because this is your business, the real money is in the money. That's it.
100%. I say this every day.
Yeah.
To build wealth, you just got to be the bank and take control of the money. And that's what you're doing. You're literally taking control of the money. You're the guy at the top of the building collecting the checks. You don't give a shit about what's going on down on the surface. You're just like, pay me.
Right.
Where I'm
Banks
taking
make a fortune. And that's all we're doing is we're just trying to get a piece.
Yeah, people don't understand how amortized mortgages work. I put so much content out. I just did another video on the 50-year mortgage showing literally how much money people will give away to save a tiny bit, couple $100 a month on a payment to pay hundreds of thousands of dollars more.
And the way they're going to sell them on it is they're going to say, but you could still pay extra, like they did, going from 15 to 30. They're like, you could still pay extra, knowing they're never going to pay extra. But they're like, oh, but you can. This way you have the flexibility. I'm like, no, you don't. It's no flex. I like if people do that with me with the 5-year. They're like, well, why don't you do it long? I said, no, 5-year, I want it to be stressful. I want it to be paid off quick and be forced to be paid off. If I gave people a 10-year mortgage, they would pay for 10 years. I want it to be, you have to get it done in 5 years, because our goal for my people is free and clear. It's freedom. That's the big thing I teach them is freedom over Lamborghinis and yachts. I'm like, I just teach them to be free. Once they're free, then they can do anything. But until they're free, that's the sole focus, is get yourself free.
Yeah. I mean, are you using Private Money Club to raise the private lenders?
We are just learning about Private Money Club now. That's why I was so excited. I told you earlier, I said there's such great synergy, because I believe you probably have 10, 20, hundreds of people that need what my people are looking for.
10,000 people on there.
Yeah, and they probably literally are looking for what they're
every single one of them has these
gaps. And my
gaps.
people are looking for them. Yeah, so I think putting them together is going to be priceless.
All of them, myself included. Like, we do lending, we do all sorts of things, but there's always 50 to 100 grand that we can't place because it's just a hard amount to place, right? So there's always extra money sitting in the self-directed IRAs, sitting in the policies, cash value. Like, we can't move small dollar amounts. I mean, you could buy cars, but like, that's it. So like, you fill this niche. There's one other group on there, but they're doing second liens. I don't like their model, but they're crushing it because they're like $20,000 to $40,000 loans, like these micro loans. But they're second position. It's the subject to stuff.
They're buying sub-twos and using it for down payments.
Anyway, I'm going to hold my thoughts on that, but you already know you've already gone through it. So you know where that's headed, but nonetheless, like, you're coming in with this brand new strategy. And at first, like, when you were saying it, I'm like, oh, he's going to say there's no lien position or anything. And then you were like, no, they're in first lien. I'm like, what? Like, that doesn't even exist on there. You certainly need to get in there and get very involved in Private Money Club if you need lenders, because that's your place. And to be quite honest, as somebody that's in there and somebody that obviously I own the company, but like, we need people like you in there, because it's a lower risk loan, and a lower risk loan at a lower dollar amount at a high interest rate. It checks the boxes.
I have a question for you though, because I know Private Money Club, and some people in our group are already in it. My question for you is, would I be in it and raising for them, or would they each get in individually raising for themselves?
I mean, I don't know if it really matters, as long as the deal's the deal and the person's going to be first lien, and whoever's in there doing it. Okay. I don't really know the answer to that. I mean, we don't really have guidelines on that. I mean, we're just providing the community and the platform. We're not doing any due diligence on deals. I mean, anyone can go in there and post as long as they're real. But the self-management, the self-reporting systems in there, like the bad actors get sniffed out really fast.
Nice.
So, and then they get flagged. They get, it's kind of like Reddit. Like, once you're bad for good, and you're probably not going to make a comeback. So
I love that.
Yeah, I mean, it weeds the riffraff out really quick.
Nice, because I have, that's the hardest part when you're managing a community is somebody sneaks in with the intention to do something else, and it's hard to do exactly what you just said. You got covered. That's great.
Absolutely. Well, let's talk a little bit let's pivot real quick. So you're coaching people. You've been doing this since '94. You got the slow flip method, about 1,400 people. I mean, this is your main gig, right? This is all you do.
That's all I do.
So you're not going out there like, I'm going to use Family Guy again, not The Simpsons. I'm going to use Family Guy where he's out like, ooh, piece candy, ooh, piece candy. You have success here, and then all of a sudden you're like, oh, well, I can do this, and then I can do this.
You drown in opportunity. And
Absolutely.
I tell my people this all the time. Every day, people are like, oh, have you heard of this? Or have you heard of that? And I say, yes, I heard of it. And I'm not saying it doesn't work. What I'm saying is what we're doing is crushing it. So let's just keep doing what we're doing. Yes, I'm sure all these things that come out every day work. I'm not saying they work or don't work. I don't even look at them because what we're doing is killing it. So why, until it stops killing it, which I can't imagine if and when it would, let's just not look at anything else. And so I am very focused on moving forward with what we do.
I always tell a story, and let me just kind of change the view here for people watching it. They kind of like sometimes like seeing two people. I always give an example of, I live in a prestigious neighborhood with lots of docs and surgeons. Now, a lot of people, when they think of a doctor, and I know growing up, doctors were the ones that had all the money, right? That's what we think. But there is a drastic difference between doctors and what they get paid. Let me give you an example. Let's take a general physician. A general physician is general. They give medical advice on lots of things to lots of patients, general. And then there is the heart surgeon. Now, I can tell you exactly what house in my neighborhood at the end of the cul-de-sac is the heart surgeon, because he does one thing. That is it. But he does it exceptionally well. He has become known for this one surgery he does, and only one. And he crushes it. But he is the specialist. And there are lots of other docs in our neighborhood that do many things. And, well, I'm not saying they're not doing well, but they're certainly not crushing it. And that is no different than what you just described. And I wish people, especially in the real estate space, would understand that the riches are in the niches. If you just fine tune and specialize on one thing and get exceptionally good at it and get to be the best at that one little thing, you will become extremely wealthy and you will bring a lot of people along. But the second you start expanding because, I can do this, I can do this, I can do this, your whole empire will crash and burn. It's just a matter of time. So I love that you said that. And I intentionally asked that because I thought for sure you're going to, we have a multifamily division and we have this over here. And you're like, nope, I just do this little $30,000 a year slow flip thing. Or $30,000 a unit.
Because it's killing it. Every time people always come up with these other, I have a podcast too. I'll tell you a funny story. So I had a guy I was interviewing on my podcast, and he had 6,000 units. And I was so impressed. He's like, I've only been doing it for like 5 years, and he was in apartments, and he had 6,000 units. And I'm like, holy crap, the 5 years. I'm like, what have I been doing wrong all the time, right? I've been doing this 30 years and I got 180 houses. I'm like, what have I been doing wrong? So anyway, so we do this whole interview and I'm intrigued by him, right? I'm talking to him, asking a lot of questions. Then we stop recording. And he starts asking me questions about slow flips, and I'm kind of like, you don't need to mess around with those. You got 6,000 units. What do you? And he's like, well, I don't make any money with them. I'm, in syndications, and I got this and that.
I knew you were going to say that. You see, when you said, I was holding my tongue. I wasn't gonna ruin it.
But you said 6,000 units in 5 days. Talking to him in awe. I'm like, you have 6,000 units.
6,000
and when we got done, it was like, well, I don't make any money. I'm like, what? I have a guy just yesterday, that still is in my group, but my group is infinite. So, what I mean by infinite is it doesn't end. So I've been doing this for a little over 10 years. And when they join, they're with me forever, right? Well, I have a guy that he hasn't shown up since 2018. And he has 4, when I say 4, I mean 4 slow flips. That's it. Not 40, not 400. He had family issues back in 2018 and a lot of stuff, whatever. We spoke yesterday because he wants to get back involved now. but through the conversation, he said, he said, we were on the phone. He says, I just got to tell you, Scott, I have 4 slow flips. It has completely changed my life. Now, mind you, they're slightly higher dollar. When he bought them, they were 30, but he's in my local market, so they're probably 180 to 250 now. But he's like, I only have 4 houses, but he probably brings in $6,000 a month. They're all free and clear, 4 houses. And he's like, it's completely changed my life, just 4. And I'm like, it was staggering to me.
Totally, he put 120,000 out.
Well, private lenders, he put nothing out. He put nothing out. He had private lenders because I bet he was in my group and we got him funded with 5-year money. They're paid off now, and that's it. He's got just 4 properties, and his whole life has changed. My number 1 guy in my group has more than me. He's closing in. By the time we go to Summit, which is in January, he'll have 300 properties, and he's only been doing it, I think, 8. Or I might be wrong, 8 or 9 years. I think 8 years, and he's got 300. He's got more than me. And everybody's like, "Well, how does he have more?" I said, "Because I have more than enough." Like one of the things I love about everything we do is focused on monthly cash flow, right? And I said, I have way more than I could spend, so I don't spend my days trying to compete and buy as many as I can. I buy what comes my way, but I'm like, I don't need any more. And I always, people always laugh at the way I word it, but I'm like, so what am I going to do? I'm going to go do more work so I can earn more money that I'm not going to spend. I'm like,
Yeah. Money isn't it true though? Money has a diminishing value, doesn't it? The more you make, the less important money is, and the more important the purpose of what that money does.
What it takes from you. Yeah. What are you willing to trade for it? And now I'm like, I have everything in the world. I literally do. I have vacation homes. I have a home in the Bahamas. I have a huge house here. It's free. Everything I have is free and clear. Yeah. I have more coming in a month than I spend. And I'm like, why would I do? And now, mind you, I still work and I obviously still train, but why am I going to put myself through more work just to have more money I'm not going to spend? And so I do buy if a deal comes across, but I'm not out searching. So my students, and this a mentor of mine told me this, which I really liked, because I called him when my guy was just passing me. Well, I had 170 at the time, and I called a mentor of mine and I said, "Could you believe he's going to have more houses than me by the end of this month?" Now he's got almost double, right? And his answer, which I loved, he says they should all end up having more than you. And I said, "What do you mean?" He's like, "Well, if you do your job right," he says, "you took 30 years worth of what you had to learn, and they get to start there."
Yeah.
He says, if you do your job right, they should all end up with more than you. And it really changed my mindset because now I push them to end up with more than me. I'm like, they're right, because I have a ton of people in my group have 50, 60, 80 houses already. And where it took me so long to get to that, 94 to 2008, I had 84 houses. I'm like, they're doing it in 2 years now. And I'm like, why? Well, because they got 30 years worth of learning curve to start with. And then they move forward from there. So, I love that mindset. I'm like, well, if I do my job, they're all going to end up better off than I am, which is awesome. A win. Because otherwise you feel like, well, why don't you just do that? They're doing better than you. I said, no, I'm winning because they, if they're crushing it, that means I did a good job.
And that's a big community that you have, but you've been doing it a long time. So I get it. And it's, like we have about 8,000 people, in our direct community and over 10,000 in PMC. So it's pretty impressive. Like when you get a big community like that, how much you can do to solve other people's problems. So like, what are the things you're doing with your community? Are you guys doing live events, doing masterminds? Like talk a little bit about how you kept a culture in your community, because that's the single most important thing.
We meet every week on Wednesdays. So that I do myself. So I host a meeting every single Wednesday, and we stay on as long as it takes to go through everybody's deals, everybody's questions. And obviously, as you can tell, that takes a while because there's a lot of people in the group. We do one live event per year, which is our summit, which is coming up in January. And unlike what I used to do live local events, and every event was new people. This is completely different. This summit is only people already in the program. So they're not newbie investors. They're all people who are already slow flipping who come to the summit. And this year we're expecting between 500 and 600 people there, which is going to be my biggest by far. Last year we had just about 400 people. This is going to be our biggest one by far. Then we have the resources we have are Like I always think about it. I'm like, I wish I had this when I was doing it. You know, I'm still doing it, but when I was trying to grow, we have people that fill the properties. So like I have people in my program who don't do anything. They have a full-time job and they're like, well, I'm buying houses because there's people that sell them in the group. So they'll buy them from in the group. Then we have people who fill them in the group. And then their sole job is just to collect payments and process them. They have boots on the ground because we have such a big network. We have people that'll go do pictures and video and locksmiths and everything in all the states that we operate in. And so it's such a great community where everything is like covered for them. Like a new person can literally graduate high school. And I'm saying that just as an example of you don't have to have any experience in anything and show up, and there's resources to buy the house right here in the group, resources to fund the house right here in the group, resources to fill the house, everything. And then it's just a matter of, you know, putting it all together every month. It's pretty awesome.
Man,
I wish I had those kind of resources when I was starting. I'm like, man, they got everything right in front of them.
Yeah, seriously. I mean, and it's kind of like I'm thinking, you know, for Private Money Club, I'm like, man, where have you been? Like, I need to get you in your community, or I need to get my community in front of your community.
I agree with you. I think
one of the
it's
two
very
ways.
synergistic on both levels. Your people need people to think funding, you know, need to do loans, and our people need people to fund houses. 100%. I think it'll be very synergistic.
I agree. Well, this has been fantastic, like really very different model. And, you know, I love that you've been in the industry as long as you have, because you've, you know, I think one of the big telltales right now when I talk to people, maybe it's just because we're getting older, but, you know, I can smell bullshit very easily. And there's a lot of bullshit right now because, listen, like, it's been such a bull run for so long. It's been so good for so long that most of the people in the space, except for some of us, you know, the older folks, like most of them have never been privy to a downturn. They say, oh, COVID, but so what, you blinked and you woke back up and that wasn't.
And it turned into a boom.
Anybody
who started, and this is no disrespect to them because I wish we never had a bust, but anybody who started from 2008 on has only seen it straight up. Yeah. And I remember how arrogant I was because I started in 94 and we didn't have any appreciation until about 2001, but starting in 2001 to 2007, anything we touched turned to gold. And I felt like I got the whole world figured out. Anything I do. I mean, and you got rewarded back then for being bad at your job, meaning like I was rehabbing. And if it took me 6 months to do a month job, it went up another 20%. So you got rewarded for taking a long time. So everything you did worked. And that's the way it's been for this last, and maybe it goes on for another 10 years. Maybe it ends tomorrow. Nobody knows. But you're right. There's so many people that's their belief that, you know, this is the way it's going.
But I think you nail it. Like no one knows, right? You can never time the market. You know, I'm an ex-Wall Street guy, you know, so it's the same thing there. You can never time the market. And when you do, you're always going to be wrong. But there always has to be something in the back of your mind and literally in the back of your gut that says something will go wrong. It's just a matter of when, and you need to be able to pivot so you don't have to ride that roller coaster that we all rode in 2008, which was absolutely awful. I almost went bankrupt. Sounds like you had a doozy.
You go bankrupt, but I lost a lot of houses.
Yeah, I mean, it was for anyone that didn't go through that and doesn't understand it. Like, I don't really know how to put it into words. Just imagine your worst nightmare, and you can't wake up from it. That's
so
exactly
the end of 2022, like. The last couple months of 2022. Every data point suggested 2023 we were going to have a downturn. Everything. I firmly believed it. I told my people to slow down. Everything. I firmly believed it. And yet we went off like a skyrocket in 2023. And that is when I realized there is no rhyme or reason because they're manipulating the markets anyway. And I tell them, everybody asks me, what do you think's going to happen? What do you think's going to happen? And I give them the same answer now, which is we are all going to find out at the exact same time. And that's a day after it happens. Until then, it doesn't matter what anyone predicts. It doesn't matter what anyone says. Nobody knows. And we're all going to find out when we wake up, and it happened yesterday. And that's it. And maybe it doesn't happen. Maybe we go another 10 years. But, you know, one of the things I used to love to say is, real estate has a 10-year cycle, but a 7-year memory, right? And I firmly always believe that. It's always been roughly 10-year cycles. Well, now, how long are we going on? 15, 16 years.
Longest in history.
17 years. And so I'm like, listen, you know, who knows? Who knows what's going to happen? We're all going to find out at the same time.
Yeah, you're absolutely correct. And some of them are going to be, you know, what do they always say? When the tide goes out, you find out who's swimming naked. There is going to be a lot of naked people. And we're not going to want to see all that, I can tell you, but we are going to see it. And it's going to be a big learning lesson. So I commend you for what you're doing, for staying extremely hyper focused on one thing and doing it exceptionally well, because, you know, I just parlay what you're doing to that surgeon at the end of the street, or to what we're doing. We do infinite banking concepts. We do it exceptionally well, and we don't want to talk about anything else. And it's served us well, and it's serving you well. And I think that's some good advice for our listeners. You know, just get really good at one thing and don't look anywhere else, and nothing but good will happen. And always have a backup plan, because, hey, everything's great until you're punched in the face, or however Mike Tyson said
Mike Tyson,
right?
yeah. Everyone has a plan until they get punched.
Everybody's got a plan until they're punched in the face. Yeah. And believe me, the punch that we're going to all probably get is going to be a Mike Tyson left hook. And if you watched his fights, that won't feel good, but you just got to be ready for it. And you just got to have some just plans in place, the boring plans that carry you through those times. So Scott, this has been great, man. I hope we do more. I hope to see you in PMC. I wish you the best of luck with your summit. I think it's gonna be great. And if people that are listening to this, which I know they're gonna be asking, I've made them wait this long, where could they learn more about getting in your program? Because I'm sure you're gonna have people lining up. I mean, thousands of people will see this.
So the easiest way, and I wouldn't say to go straight to the program, the easiest way would be to read the book. I wrote a book called The Art of the Slow Flip, which you can get anywhere, but the easiest way would just be to go to slowflip.com, slowflip.com. And there's a ton of resources on there, as well as the book. Otherwise, if you wanted a hard copy book, you can get it from Amazon or wherever you get books. But it's called The Art of the Slow Flip. And if you go to slowflip.com, that would be I always tell people, I said, start with the book before anything else, because the reason is, and you know this, Chris, some people hate what we do, and some people resonate with it. Some people, when they read it, they're like, this is what I've been looking for all my life, and they never look back. And some people read it and they're like, I want apartment complexes. I don't want to wait 5 years. And so I'd rather them start there, and then they know if that's the path they want to go down, and then we can get to showing them everything else.
All right. Well, in the show notes, right in the top, folks, the description, we're going to have that, slowflip.com. Grab the book, The Art of the Slow Flip. And this has been wonderful. Thank you so very much for your time. I wish you the very best, and I'm sure our paths will cross very soon, and probably in PMC. With that being said, folks, thanks everybody for joining us for this episode of Money School Elite, and we will see you on the next one.
Thanks for having me. That was great.